Good morning. Welcome to my channel. I am CA Dhanashri Saurabh. Through this channel, I am trying to simplify the things around us. So, hope you all are doing well. We all are quarantined. Some are might busy for their official work from home. Some are enjoying their family times. I am also doing some mix of the things. Today I am thinking to discuss with you some interesting topic that everyone knows that for COVID-19 government has came up with various instruments to fight against the COVID-19. RBI also announced the decrease of a repo rate, reverse repo rate, CRR, the deferment of EMI. So what it exactly it mean? How it will affect the general people like us? So it's really necessary to understand this concept. So without wasting so much time, let's get started. RBI has announced a two-step. The one step is putting so much money in the hands of bank, and the another thing is borrower has given a more time to repay it. So what RBI did? RBI took a two three things. So let us understand one by one. The first thing is RBI decreased the interest rate. It is a rate at which bank borrows money from RBI. It is called as repo rate. So nowadays what happened, bank used to borrow from RBI at the rate of 5.15%, but now bank can borrow RBI from at the rate of 4.40%. It means decrease in 0.75 bps in a repo rate. So there are various types of loan given by bank to a general public like us. So it is directly related to a repo rate. In technical term, it is called as external benchmark. So as a decrease in repo rate, the various loans given by bank to a SME, industry, even a home loan, it will get reduced by 0.75 points. So don't think like it is an exotic thing. It does matter if someone want to borrow money from bank, or even it is applicable for existing home loan. By the period of 3-4 months, the interest rate will get reduced. The second thing is reverse repo rate. Suppose, for example, if a bank has lot of money and bank don't know what to do with such a money, then bank go to RBI, give such a money to RBI and receive interest on it. It is called as reverse repo rate. Now bank used to receive a 4.9% reverse repo rate, but now bank receive a only 4% reverse repo rate as a decrease in reverse repo rate. Example. A bank collects lots of cash in the form of fixed deposit, term deposit from the people at the rate of 6% as 7%. In that proportion, bank receives only 4% from RBI against the 6-7%. It means bank loses his money if bank puts his money in RBI. So as reducing reverse repo rate, RBI just wanted to inform bank that just give your money, just lend your funds in a general public. Don't put such a money, don't come to RBI and put such a money to Reserve Bank at the rate of 4%. The third thing is CRR. In every country, CRR it means cash reserve ratio. In every country, certain percentage of deposit should not be lent. It should be kept reserve. It is called as cash reserve ratio. Percentage of deposit, it should be in a cash and it should be kept in RBI. It should not be lent. Nowadays, before that, CRR used to be 4%. Now it is a 3%. So difference between 4 minus 3, that is 1%. 1% of total deposit of country is with no bank to lend. It means bank has a more money to lend in a market. So automatically interest rate on a loan will reduce. Another thing is bankers can go and borrow from RBI by giving government securities bond just as a collateral. So bankers can go and borrow money from RBI over and above that government security with a higher rate of interest. It also get increased. It is called as marginal standing facility. So in general word, what it means, the banker has a lots of funds to lend in a market or to give in an industry. Further, they can borrow 3 years money from RBI. It is called as a LTRO, that is longer term repo rate. So what RBI says that I will give to banker at the rate of 4.4%. It's very attractive. If a bank collects money from a general people in the form of fixed deposit, then bank has to pay 6%. No, bank need to pay only 4.40% to RBI and also get a 3 years of deposit. It is also very attractive. But what bank says? Bank says, yeah, you can take this 4.40%, but you need to use such a money to buy a corporate bonds only. So again, it's an attractive incentive for a corporate borrower. If a corporate borrower floats a bond, then bankers are ready to accept such a bonds because it is a very attractive and advantageous to get the money at a cheap rate. So there are so many ways that government came up various instruments to have a more money in the hands of banks and also give that money at a cheap. It's just a one side. The second side is for borrower. Borrower has also given a lot more time to repay it. So don't be what government says. No need to pay interest for a 3 month. So wait, don't be under impression that the interest are waived. What government said for the month March, April, May. You no need to pay interest on your loan. You have to pay interest from the month of June. So no, don't be under impression that from June month you will pay 4 month interest. No, if you are taking a term loan for 5 years, then it will ending on a April 2025. So if it will ending April 2025, then it will postpone for a 3 month, that is July 2025. So so government has given these 3 months and everything is pushed back. Hope you understood these things. If you really think these things will help you, then please do like, share and subscribe. I will come up with a very interesting topic very soon. It is related to a how to save income tax by donating more to a PM Care Fund to fight against the COVID-19. So I again request to please be indoor, be safe and be connected. Thank you. Bye bye.